Hi, this is Peter Bain introducing you to Winning Strategies for the Forex Trader with Vic Noble. This is the coach's guide to building a successful trading plan. In his comprehensive coaching course, Vic uses experience gained from coaching hundreds of traders to help you build a simple, consistent trading plan that you can use each trading day, identify the common mistakes made by struggling traders, show you how to effectively integrate Fibonacci and price structure together with pivot points and MACD, discuss the importance of top-down analysis and how to know exactly which direction to trade, show you how to improve your odds, teach you the crucial elements of risk and trade management, demonstrate 2 bonus trading patterns, and reinforce your learning with weekly video updates showing the trades in action and giving you an ongoing learning experience. Vic Noble has been providing personal coaching to Forex Mentor members for more than 2 years. He has coached hundreds of traders. He has turned losing traders into profitable traders. He is versant with all the common problems that struggling traders face. He uses a straightforward, concise approach, and his coaching course has been produced by popular demand.
Well, hello, and a very warm welcome to you. My name's Vic Noble, and I'm really excited to be presenting this course to you and to have the opportunity to help you in your development in becoming a successful foreign exchange trader. Now, before we get going, I just have to express my deep gratitude in having the opportunity to work with the Forex Mentor team. And Peter, thank you so much for those kind words. I've been trading the various markets for over 25 years. I was a futures broker for over 5 years. This is me at a futures conference that we hosted annually. And of course, I've had the opportunity to work with many traders. Since the beginning of 2006, I've had the true pleasure of running the personal coaching services on behalf of Forex Mentor. And you know, the interaction that I've had with hundreds upon hundreds of traders that I've talked to has given me unique insights into the minds and habits of traders, both successful and unsuccessful. So the content of this course is a reflection of and is geared around those very valuable insights. Yes, there's a lot of information in this course. That's because trading is not just about where to buy and where to sell. There are other factors and issues that are critically important, and you need to take them into consideration before you trade. I was a pilot for many years, and you know, trading is a lot like flying. You don't just jump in, start up, and take off. Okay, sure, you might get away with it for some time, but you can be rest assured that it will bite you hard eventually. Okay, so just like a pre-flight checklist, there's a pre-trade checklist. I put this course together for people of all different experience levels, from beginners right on up. And you can see that the course has been divided into various sections that you can access with just a click of a button. And of course, you'll also have access to the trade examples, not only on this CD, but the ones that I'm going to be posting each week or as they come available, so that you'll be getting ongoing tutorials that are going to illustrate the trades that I'll be teaching in this course. The first part of the course is going to be all about the trading technique that I show in the online coaching sessions. And then in sections 7 and 8, I'll be showing you the 2 bonus trade setups that can be just awesome trades. One's called the Gartley pattern, and the other shows how to use overlapping Fibonacci levels to identify very high odds trading opportunities. And finally, I want to remind you to be patient, disciplined, and consistent. You're going to hear these words a lot. And to use proper risk management when you're trading the markets. Okay? Make the decision to align yourself with all of the common things that successful traders do. So let's get started with section 1 and start laying the foundation. Now let's talk about the game plan now. You know, my objective in producing this course is twofold. First, I want to help you avoid the pitfalls that plague most traders, while at the same time showing you the path of successful traders, okay? And secondly, to provide you with a sound strategy on how to approach trading consistently, okay, and give yourself the best opportunity for taking profits from the markets while at the same time keeping your risk very small. Okay, that's just a critical combination. The things that losing traders do are super common, but the things that winning traders do are also very common. And by taking a close look at both groups of traders and recognizing the common traits of each, you're going to have a far greater advantage than most people who enter the market with no game plan whatsoever. Right? And believe me, that unfortunately is the way it is with the vast majority of people. You don't want to be in that group. Now, I mentioned at the beginning of the course that I was a futures broker for many years, And during that time, I had the unique opportunity of watching how most people handled their trading accounts, and it just blew me away, amazed me, how reckless a lot of people were with their hard-earned money. Look, losing is part of this business. We all know that. You're going to have losses, so you have to get comfortable with them. But losses shouldn't be looked upon as a bad thing, but rather as part of the process of winning, right? Because a loss really is just another trade. However, and this is very important, losses need to be very carefully controlled because preservation of your capital is absolutely everything. It's just of paramount importance. So keep this in mind at all times when you're trading. Really, really important. Now I want you to take a look at how this compounding effect might work. Let's once again assume a starting account size of $10,000, okay? And let's see what happens if we were able to make 6% per month, okay? Because at 6% a month, okay, you'd return over 100% per year on your account. Well, the question is, would 100% a year turn your crank? What about 50% or 80%? Well, you know, in my book, these are just great returns. And if you continued on the 6% per month path, just look what happens in about 7 years. I don't know about you, but I think that kind of performance is just outstanding. Well, of course, the million-dollar question here now is, what does it take to make 6% a month? Well, as you'll see, not a lot. Let's use our same $10,000 account size example. And remember, our risk is no more than 2% or $200, okay? And once again, we'll just assume that we're trading the euro US dollar in a mini account with a 25 pip stop loss, which means, remember, we can trade as many as 8 lots. Now take a close look at this. If you only made 20 pips net all week, I'm not talking 20 pips a day, I'm talking 20 pips for the entire week. On 8 minis, that'd be $160 a week, $640 per month. It's more than 6% a month. It's more than 100% a year on 20 lousy little pips a week. You see, you don't need to trade a lot. You just need to be patient and picky about the setup. Hey, maybe you'll get a lot more than 20 pips in a week. If you get multiple good qualified setups, that's great. But if you only got 20 pips for the week, look at the potential. Be patient and be disciplined. What happens to a lot of people is that they stay up all night trying to find a trade with their eyes all bugged out, maybe drinking coffee to stay awake or whatever. And of course, they have this great compulsion to trade because, after all, that's why they're there. Right? They're not there for their health. This is a poisonous situation. And I'm going to be talking more about that in the section on psychology. And it will usually lead to, bad trading decisions based more on being antsy for a trade rather than a sound technical setup. And maybe the trader saw a big move happen that they didn't get in on, so they're upset about missing that. So now they're going to try and make it up because they're always thinking to themselves, I've got to get those 20 pips or 25 pips a day or whatever it is, no matter what. Well, I don't think I need to tell you how that story usually ends up. Well, in section 3, we're going to take a look at how we want to start off our trading day. Okay, and all the important things we need to be aware of before we start clicking the buttons. Okay, so when you first sit down at your computer, what should you do? Well, the first thing you want to do is check for fundamental news announcements. Okay, you need to know what's coming out. Okay, you don't want to step in front of a locomotive, right? If there's an announcement forthcoming, it doesn't mean that you can't trade, but you should be aware of what's coming out and how much impact that particular number normally has on the markets. Okay, I definitely recommend that you do not initiate a trade during the non-farm payroll announcement in the United States, unless you're extremely experienced. Okay, so that's just a very, very volatile number. Now, if you're already in a trade just before the number is about to be released, there's several ways to handle it. First of all, you don't need to get out as long as the technicals still support the position that you're in. However, you might decide to take part of your position off and put the stop to break even on the remainder. Or maybe you'll liquidate the entire position. Or it may depend on how much profit you have in the trade just before the announcement, right? A lot of it might depend on what the report is that's coming out. Okay, again, everyone's going to handle this differently depending on your own risk tolerance and level of aggressiveness, etc. So there's no right or wrong answer on this. I've said throughout this course, trading is not all black and white. There are times when you're going to have to use your own discretion. If you're day trading using the 15-minute charts, start by first taking a look at the daily, then the 4-hour, and then the 1-hour chart. And the 15-minute chart is the last thing you need to look at. Okay, and just so you know, I don't happen to use a 5-minute chart for day trading, and if you do, that's fine. But when we look at trade examples later, you're going to see how I enter a trade without having to look at a 5-minute chart. Okay, you've checked for fundamental news releases, and you've decided on the direction you want to trade based on your top-down analysis. Now you need to start looking for a trade based on the entry method that you like to use. And I'll show you exactly what I do, and you can do it that way if you wish, but you don't have to do it exactly the same way I do. Okay? As long as you've done a proper top-down analysis and you've got the direction right, you can use a variety of methods to actually get into a trade. Or maybe you like to look for certain patterns before trading. For example, I've coached people who only like to trade if there's a divergence between MACD and price on the hourly or 4-hour chart, and that's just fine. And the important thing in this case is that you look for the divergence on the higher time frame, not on the 15 or the 5-minute chart. Or maybe you like to look for a specific chart pattern before trading, such as a head and shoulders pattern or a symmetrical triangle or whatever. Just remember to look for these patterns on the higher time frames. That's where the strength is. But the major point here is this: however you decide to trade, stick with the plan. You know, when you start to deviate, flipping around from one thing to another, maybe you've been there before, you're going to be chasing rainbows forever and you will not make money. Okay, you're going to be constantly looking for the old holy grail, latest greatest indicator to make you become a successful trader. Well, I'm afraid to say that I don't believe that's going to do it for you. What you need to do is change your approach and consistency, etc. Because, you see, it really doesn't matter how you want to trade as long as the methodology is sound and you remain consistent. Think about this. Do you really think that some other system is going to be the difference for you? See, you have to understand that every single system out there has losses, drawdowns, streaks of wins, streaks of losses. What you need to do is settle on a method of trading that makes sense to you, something that you can see easily when you look at your charts. And then you have to stick to it and trade it over and over using sound money management and being consistent. That's what will make the difference.